Stop everything you're doing right now. It's Saturday, January 17th, 2026, and while the financial markets are closed for the weekend, while Wall Street traders are sleeping off their Friday night celebrations, while most of America is scrolling through social media or watching sports, something absolutely critical is happening that nobody's talking about. The dollar, that piece of paper in your wallet that you've been conditioned your entire life to believe has value, is losing purchasing power at a rate that should terrify you. And here's the kicker. The dollar doesn't take weekends off. The devaluation doesn't pause. The money printing doesn't stop just because the stock market closes at 4 p.m. on Friday. While the silver market is technically closed right now, silver is gaining value. Not on a chart. You won't see a green candle moving up on your trading platform, but in reality, in the real world, in purchasing power. Because every single second that passes, every single moment that the Federal Reserve's printing press runs, every single dollar that gets created out of thin air makes your existing dollars worth less. And it makes hard assets like silver worth more. This isn't theory, this isn't speculation, this is mathematical certainty playing out in real time, and if you don't understand what I'm about to show you in the next several minutes, you're going to be one of the casualties when this system finally breaks. Let me show you something that should fundamentally change how you think about money, about savings, about your future. I'm looking at a chart right now, the official Federal Reserve data on currency and circulation. This is not conspiracy theory, this is not some shadowy information from the dark web. This is published data from the Federal Reserve itself, and what it shows is absolutely staggering. In October 2025, the most recent data point, there were $2.415 trillion in physical currency circulating in the economy. But here's where your brain needs to pause and really absorb what I'm about to tell you. In 2020, during the pandemic, the Federal Reserve printed 20% of all dollars that had ever existed in circulation up to that point. 20% in a single year. Let that sink in for a moment. Imagine if you had a rare baseball card collection. You spent decades building it. You have cards that are valuable because they're scarce. And then overnight, someone prints 20% more of those exact cards and floods the market. What happens to the value of your collection? It crashes. It becomes worth less. Not worthless yet, but worth significantly less than before. That's exactly what happened to every dollar you owned in 2020. But here's where it gets worse. That wasn't a one-time event. That wasn't an emergency measure that ended. The printing continued. Look at the chart. From 2020 through 2025, the curve goes nearly vertical. We went from around $800 billion in circulation in 2010 to over $2.4 trillion by late 2025. That's a tripling in just 15 years. And the acceleration is what should scare you, because acceleration means the problem is getting worse, not better. It means the system is becoming more desperate, not more stable. And they're going to keep printing. They have no choice. The United States government is running deficits measured in trillions of dollars per year. The debt is over $35 trillion and climbing. Social Security obligations, Medicare obligations, government pension commitments, military spending, infrastructure promises, all of it requires money that doesn't exist. So where does that money come from? It gets printed. It gets created digitally. It gets conjured out of thin air by central bankers who tell you it's necessary for economic stability, for preventing deflation, for supporting employment, for whatever polite academic language they use to disguise the simple truth. They're debasing the currency to pay bills they can't afford. And you know what happens when this bubble finally pops? Because it will pop. Every fiat currency in human history has eventually failed. Not some of them, not most of them, all of them. The average lifespan of a fiat currency is about 27 years. The dollar has been a pure fiat currency, completely disconnected from gold, since 1971. We're now 55 years into this experiment, and the cracks are showing everywhere. When this bubble explodes, when the world finally loses confidence in the dollar's ability to store value, the panic will be unlike anything we've seen in modern history. Gold will go to $8,000 per ounce. Maybe more, maybe $10,000 or $12,000 if the crisis is severe enough. And silver will hit $800 per ounce or higher. These aren't random numbers I'm pulling out of thin air to excite you. These are calculations based on historical ratios, on monetary resets, on what happens when currencies collapse and people flee to hard assets. When the Weimar Republic collapsed in Germany in the 1920s, people who held gold and silver survived. People who held paper marks became destitute overnight, their life savings worthless, their pensions gone, their government bonds confetti. The same thing happened in Zimbabwe, the same thing happened in Venezuela, the same thing happened in Argentina multiple times, the same thing happened in Yugoslavia, in Hungary, and Bolivia. Every single time a government prints too much money, every single time debt becomes unpayable, every single time the central bank tries to inflate its way out of a crisis, the result is the same. The currency dies and hard assets soar. So let me ask you a very direct question, and I want you to really think about this. Why do you think China is buying every ounce of silver they can get their hands on? Why do you think the Chinese government has made precious metals a strategic part of their economic policy? Why do you think they're accumulating gold at record rates through their central bank? Why do you think they're stockpiling silver for industrial use, for reserves, for strategic purposes? I'll tell you why. Because China understands something that most Americans have forgotten. Real wealth is measured in things, not in paper promises. China is building their economy on tangible assets: silver, gold, copper, rare earth elements, infrastructure, manufacturing capacity. They're not building their wealth on financial derivatives or credit default swaps or mortgage-backed securities. They're building it on real things that have real value regardless of what any government says. Meanwhile, what is the United States building its economy on? Dollars, paper, digital entries in computer systems, promises backed by nothing except the full faith and credit of a government that's $35 trillion in debt and adding more every single day. The dollar is backed by faith, your belief that it will be accepted tomorrow. But faith is fragile, and when faith breaks, it breaks fast. Let me explain why silver specifically is in such a unique position right now, and why I genuinely believe that holding physical silver is one of the smartest hedges you can make for yourself and your family. Notice I said hedge, not investment. Notice I didn't say this is financial advice, because I'm not a financial advisor and you need to make your own decisions. But I am going to share with you the facts, the data, and the logical conclusions that I've reached after years of studying monetary systems and commodity markets. Silver is becoming scarce, not in the future, right now. The world has been running a silver deficit, meaning consumption exceeds production, for 6 consecutive years. Every year, we mine less silver than the world uses. Where does the shortfall come from? From above-ground stockpiles, from existing inventories, from the reserves that were built up over decades. And those stockpiles are being drawn down. They're finite. And when they're gone, the market has to reprice silver at whatever level is necessary to either reduce demand or incentivize new supply. But here's the problem. You can't just turn on new silver supply like a faucet. Mining is a decade-long process. From discovery to feasibility studies to permitting to development to production, you're looking at 5 to 10 years minimum, and that's in a best-case scenario with a friendly regulatory environment. In the current environment, with ESG concerns, with environmental regulations, with permitting delays, with community opposition, it can take even longer. So even if silver goes to $200 or $300 per ounce and mining companies decide it's worth developing new projects, those projects won't produce a single ounce of new silver until 2030 or later. That creates a window, a period of years where demand is accelerating and supply can't keep up. And in commodity markets, those windows are where prices go parabolic. Now let's talk about demand, because this is where the story gets even more compelling. Silver isn't just a monetary metal that central banks might buy or that investors might hoard. Silver is an industrial metal that modern technology cannot function without. Solar panels require silver. There is no substitute that works as well for conducting electricity in photovoltaic cells. Electric vehicles require significantly more silver than traditional cars. The electronics, the battery management systems, the charging infrastructure. 5G networks require silver. Semiconductor manufacturing requires silver. Medical applications, antibacterial treatments, wound dressings, medical devices require silver. The green energy transition that every government in the world has committed to requires massive amounts of silver. The electrification of transportation requires silver. The digitization of everything requires silver. This isn't optional demand that goes away if the economy slows down. This is structural demand that's baked into the infrastructure plans of every major economy for the next 20 years. And here's the kicker. That industrial demand is completely separate from investment demand. Right now, investment demand for silver is relatively modest. Most people don't own any silver. Most portfolios have zero exposure to precious metals. But what happens when the public wakes up? What happens when the average person realizes their dollars are losing value and they need to protect their purchasing power? What happens when silver goes from being an obscure niche asset to being a mainstream topic on financial news? The investment demand that comes in during those moments can dwarf the industrial demand. In 2011, when silver briefly hit $50 per ounce, the retail buying frenzy was so intense that mints around the world couldn't keep up. Premiums on physical silver coins went to $10 or $15 over spot, delivery delays stretched to weeks or months, and that was with silver at $50 after a steady climb. Imagine what happens if silver gaps to $100 or $150 in a matter of weeks because of a currency crisis or a supply shock or a short squeeze in the paper market. The scramble for physical metal would be unlike anything we've seen, and once the supply chain breaks, once the mints run out, once the dealers have nothing to sell, once the refineries can't produce fast enough, price becomes irrelevant because you can't buy what doesn't exist. That's when you see rationing. That's when you see governments imposing export restrictions. That's when you see premiums explode to 50% or 100% over spot. Now let me address the elephant in the room, the question I know some of you are asking. If this is all so obvious, if the dollar is really being debased and silver is really becoming scarce, why isn't everyone talking about it? Why isn't this on the front page of every newspaper? Why aren't financial advisors recommending it? Great question. Let me answer it. First, the financial system profits from you staying in dollars. Banks make money when you keep deposits. Brokerages make money when you trade stocks and bonds. The government benefits when you hold currency because it makes their debt easier to manage. Nobody in the established financial system has an incentive to tell you to exit dollars and buy hard assets. That would be like expecting McDonald's to recommend you stop eating fast food. Second, most financial professionals are products of the system. They went to the same business schools, they learned the same theories, they were taught that inflation is always manageable, that central banks are competent, that fiat currency is the pinnacle of monetary evolution. They genuinely believe this stuff because they've never studied what happens when these systems fail. They've never lived through a currency collapse. They think it can't happen here because they've been conditioned to think American exceptionalism extends to monetary policy. Third, cognitive dissonance. It's psychologically easier to believe the system is fine than to confront the possibility that everything you've been told is wrong. It's easier to trust that the experts have it under control than to accept that we're in uncharted territory with debt levels never seen in human history. So most people don't want to hear it. They don't want to think about it. They want to believe their 401k will be fine, their social security will be there, their dollars will still buy groceries in 20 years. But wishful thinking doesn't change reality, and the reality is that we are living through the late stages of a monetary experiment that is showing all the signs of failure. The dollar is losing value, not might lose value, is losing value, right now, today, while you're reading this, while the markets are closed, while you're living your life. And silver, along with gold and other hard assets, is gaining value, not on a chart, not in nominal dollar terms necessarily, but in real terms, in purchasing power, in its ability to preserve wealth across time. Because silver can't be printed, silver can't be digitally created. Silver is a physical element with a finite supply, and that finite supply is what gives it value in a world of infinite money printing. So what do I want you to do with this information? First, I want you to understand that I'm not telling you to panic. I'm not telling you to liquidate everything and buy silver tomorrow morning. I'm not giving you financial advice because I'm not qualified to do that and I don't know your personal situation, your risk tolerance, your financial goals, or your timeline. What I am telling you is to think, to question, to educate yourself. Look at the chart of currency in circulation, look at the trajectory, look at the acceleration, and ask yourself, does this look sustainable? Does this look like a system that's healthy and stable? Or does this look like a system that's running on borrowed time? Then look at silver. Look at the supply-demand fundamentals. Look at the industrial uses. Look at the historical role it's played as money for thousands of years. Look at what China is doing. Look at what other smart money is doing. And ask yourself, does it make sense to have at least some exposure to an asset that can't be printed and that has intrinsic value? I'm not saying put your entire net worth into silver. I'm not saying bet the farm. I'm saying consider whether having some physical metal, whether it's silver coins, whether it's small bars, whether it's whatever form you can actually take possession of, makes sense as a hedge, as insurance, as a worst-case scenario protection for you and your family. Because here's what I know with absolute certainty. If the dollar collapses, if we have a currency crisis, if confidence breaks and the system resets, the people who hold physical precious metals will be in a far better position than the people who hold nothing but paper promises. That's not speculation. That's history. That's what has happened every single time throughout human civilization when a currency fails. And I want to be very clear about something. I'm not rooting for a collapse. I'm not hoping for chaos. I would much prefer a world where the dollar remains stable, where governments are fiscally responsible, where central banks don't print money recklessly. But hoping for that world and living in that world are two different things. And the data tells me we're not in that world. We're in a world where the money supply has more than tripled in 15 years. We're in a world where government debt is growing faster than GDP. We're in a world where the solution to every crisis is to print more money. So the question isn't whether you believe me or agree with my analysis. The question is, what are you going to do to protect yourself if I'm right? What's your plan B if the dollar loses half its value over the next 5 years? What's your hedge if inflation comes roaring back and your paycheck can't keep up with the cost of living? What's your insurance if we have a monetary reset and paper assets get restructured or defaulted on or inflated away? For me, part of that answer is physical silver. Not all of it. I'm not a one-asset person. But physical silver is part of my strategy because I understand that it has properties that paper assets don't have. It's tangible. It's portable. It has thousands of years of monetary history. It has industrial demand that creates a floor. And it's scarce in a way that dollars never will be. Now let me give you some practical guidance because education without action is just entertainment. If you're thinking about acquiring some physical silver, here's what you need to know. First, understand the premium. When you buy physical silver coins or bars, you pay more than the spot price. That premium covers the cost of minting, distribution, dealer markup, and so on. Premiums vary based on the product, the dealer, and market conditions. In normal times, you might pay $3 to $5 per ounce over spot for common coins. In times of high demand, premiums can go to $10 or $15 or more. Second, decide what form you want. Silver Eagles, Silver Maples, Silver Britannias. These are all government-minted coins with high recognition and liquidity. They're easy to sell when you need to. The downside is they carry higher premiums. Silver rounds, privately minted discs, carry lower premiums, but may be slightly harder to sell. Silver bars, especially larger ones like 100-ounce bars, have the lowest premiums per ounce but are less divisible. Think about what makes sense for your situation. Third, storage. This is critical. If you're going to hold physical silver, you need to think about where it's going to be. Some people keep it at home in a safe, some people use safe deposit boxes at banks, though there are risks if the banking system has problems. Some people use private vault storage facilities. There's no perfect answer. Each option has trade-offs. The point is to have a plan and not just stack silver in a closet where it might get stolen or where family members might not know about it. And speaking of family, let me address something that's both funny and serious. There's a meme in the precious metals community that goes like this. When silver was cheap, your spouse thought you were crazy for buying it. When silver starts running, suddenly it becomes our silver. And when silver goes parabolic, it becomes my silver. The joke points to a real issue. Have the conversation now. Make sure the people close to you understand why you're holding these assets, what the plan is, and what role they play in your overall financial picture. Because the worst time to have that conversation is when silver hits $200 and suddenly everyone in your household has opinions about what you should do with it. The best time is now, when it's calm, when you can explain the reasoning, when you can set expectations, and when you can make sure everyone understands this is a long-term hedge, not a get-rich-quick scheme. Now let me zoom back out to the macro picture because I want you to understand the forces at play that go beyond just silver. We're living through a transition in the global monetary order. The post-World War II system dominated by the US dollar is fragmenting. It's not collapsing overnight. These transitions take years or decades, but the process has clearly begun. You can see it in China's efforts to internationalize the yuan and settle trade in their own currency. You can see it in the BRICS nations developing alternative payment systems. You can see it in Saudi Arabia selling oil in currencies other than dollars. You can see it in Europe's push for a digital euro that could reduce dependence on dollar clearing. You can see it in central banks around the world buying gold at record rates and diversifying their reserves. All of these developments point to the same underlying reality. The world is losing confidence in dollar hegemony. Not because they hate America, not because of politics, but because the math doesn't work. You cannot run trillion-dollar deficits forever. You cannot print trillions of dollars without consequences. You cannot weaponize your currency, freezing assets, imposing sanctions, cutting countries off from the SWIFT system without other nations deciding they need alternatives. And as the dollar's role diminishes, as it goes from being the dominant global reserve currency to being one option among many, what happens to all those trillions of dollars that are held overseas? What happens when foreign central banks and foreign investors decide they need less dollar exposure? Those dollars come home. They flow back into the US economy. And when they do, that creates inflation. Real inflation. Not the sanitized CPI numbers the government publishes, but actual loss of purchasing power that you feel when you buy groceries or pay rent or fill up your gas tank. That's the environment where precious metals shine. Not because they go up in some absolute sense, but because they maintain purchasing power while paper currencies lose it. If silver goes from $90 to $300 while the dollar loses 2/3 of its value, you haven't tripled your wealth, you've preserved it. That might not sound exciting, but in a currency crisis, preservation of wealth is everything. Now let me address another common question. What about Bitcoin and crypto? Why not just buy digital assets instead of physical metal? Look, I'm not here to bash crypto. Digital assets have their place. They serve certain functions, but they're not the same as physical precious metals. Bitcoin requires the internet, requires electricity, requires a functioning technology infrastructure. Silver works when the power goes out. Silver works when the internet is down. Silver works in any scenario. Also, Bitcoin has only existed for 15 years. Silver has been money for 5,000 years. Bitcoin hasn't been tested through a real monetary collapse or a major war or a prolonged global crisis. Silver has been tested through all of those things many times, and it has always retained value. That track record matters. I'm not saying don't own Bitcoin. I'm saying don't assume Bitcoin replaces the need for physical hard assets. Diversification across different types of assets, some digital, some physical, some paper, some real, is the smart approach. But if you're thinking about crisis protection, about worst-case scenarios, about what survives when systems break, physical metals have a track record that nothing else can match. Let me give you one more piece of historical context that I think is crucial. In 1980, silver briefly hit $50 per ounce during a period of high inflation and monetary instability. If you adjust that $50 for real inflation, not the government's CPI numbers, but actual loss of purchasing power, silver would need to be somewhere between $500 and $800 today to match that 1980 peak. Think about that. Silver at $90 today is still far below its inflation-adjusted high from 45 years ago. That tells you two things. First, silver has enormous room to run if we see anything like the monetary conditions of the late 1970s and early 1980s. Second, silver at current prices is historically cheap in real terms. Not cheap compared to where it was 2 years ago, it's obviously up significantly, but cheap compared to what it could be worth in a crisis scenario. And here's the thing. The conditions we're facing now are in many ways more severe than the 1970s. The debt levels are higher, the money printing is more aggressive, the geopolitical instability is arguably worse. The supply-demand fundamentals for silver are tighter because of industrial demand that didn't exist back then. So if silver hit $50 in 1980 under those conditions, what could it hit now under these conditions? I don't have a crystal ball. I can't tell you the exact price or the exact timeline. But I can tell you the math and the history suggest that silver has the potential for gains that would be truly life-changing for people who position themselves correctly. Not guaranteed, nothing in markets is guaranteed, but the probability is high enough that it's worth taking seriously. So here's my final message to you on this Saturday, January 17th, 2026, as you think about what comes next. The dollar is losing value every single day. The currency in circulation has exploded. The debt is unpayable. The money printing will continue until the system breaks. Those are facts, not opinions. What you do with those facts is up to you. For me, holding physical silver is part of the answer, not the entire answer, not a magic solution, but a reasonable, rational hedge against a monetary system that's showing all the signs of late-stage instability. Silver is on sale, not in nominal dollar terms perhaps, but in terms of what's coming. Because when gold hits $8,000 and silver hits $800, when the panic sets in and people are scrambling for hard assets, you won't be able to buy. The shelves will be empty, the premiums will be insane, the opportunity will be gone. Right now, you have the chance to act while things are still relatively calm. Right now, you can acquire physical metal at reasonable premiums with reasonable availability. Right now, you can position yourself before the crisis instead of during it. That window won't stay open forever. So educate yourself, do your own research, understand the risks and the rewards, talk to people you trust, make your own decisions based on your own situation. But whatever you do, don't ignore this. Don't pretend the dollar is fine just because that's easier to believe. Don't assume the system will fix itself. Don't wait until it's too late. The markets might be closed today, but the monetary debasement isn't. The dollar is losing value right now, and silver, real, physical, tangible silver, is gaining value, not on a screen, in reality. The question is whether you're going to recognize that reality and act on it, or whether you're going to look back years from now and wish you had.